From 11FS, this is FinTech Insider News, and I'm your host, Kate Moody, Strategy Director at 11FS. Thanks for downloading this podcast. If you like what you hear, why not recommend it to a friend? This week, we're talking Orum launch a new first-of-its-kind account verification tool for FedNow. We're joined by Stephany, their CEO, who talks us through precisely what it is they've built and what that process has been like to build on top of these FedNow rails for the first time. Metro Bank have secured a rescue deal but look to sell off £3 billion of its residential mortgage book. We talk through some of the sort of historical issues that Metro Bank have faced, how they've got to where they are now and what the future might look like. And what do you think of Nationwide's new branding? We're joined by a member of the Nationwide team to talk us through what it is they're trying to achieve and kind of what it is more broadly that they're looking to do in the market. We get into all this and much more on today's show. Back after these messages.
Hello and welcome,
LFG people,
to FinTech Insider,
Blockchain Insider, 11FS Spotlight,
11FS Explores,
Open Mic Night,
After Dark. Through our podcasts, videos, newsletters, and live events, we have a direct line to a truly global fintech community. So if you're looking to sponsor and collaborate on content that connects with everybody from fintech beginners to the biggest VCs, then chat to our team at sponsors@11fs.com or visit 11fs.com to find out more.
Long live the community.
Commercial banking is changing faster than many banks can keep pace with. The innovation that's been unleashed by digital technologies and fintechs has transformed what commercial banking looks like today. In our brand new report, in association with Infosys Finacle, we explore the new generation of commercial banking, how value chains are being transformed, and what banks need to do to thrive in this new ecosystem. A must-read report for anyone in commercial banking, we combine our insights with those of 14 thought leaders from across financial services to break down the current situation, the catalysts of change, and what impact it will have on the industry. Don't miss out. Download your copy today at 11fs.com/commercial banking.
Welcome to episode 793 of FinTech Insider. I'm Kate Moody, Customer Strategy Director at 11FS. I'm joined this week on FinTech Insider News by three fantastic guests to break down this week's biggest stories in FinTech and financial services. Firstly, a massive FinTech Insider hello to Stephany Kirkpatrick, CEO and founder at Orum. Pleasure to have you on the show, Stephany. Please tell our listeners a little bit more about you and Orum, please.
It's such a pleasure to be here. Thanks for having me for round two of this conversation. Hi, everybody. I'm the founder and CEO of Orum. Orum provides the simplest API for fast, reliable payments. And now, this week, instant account verification, which, of course, we'll talk to you more in this episode about what we've been building on this new product. We're obsessed with solving the time to money problem in the US. And I think it's just a shocking statistic that more than half of Americans can't pay an unexpected $1,000 bill. And most adults have very little in savings. And so the concept in the US of instant access to money is a total myth. And right now, consumers and businesses aren't really thinking about how their money moves from point A to point B. They just realize that they need it faster and instantly. And that's the job to be done for Orum. So we work on the back end to make that experience seamless. And our single unified API unlocks access to all the different payment rails here in the US, including, and I think importantly, the newest ones, RTP, ACH, same-day ACH, wires, and now FedNow. So we're excited to be here and talk more about it.
Super exciting to have you back on the show. So thank you for taking the time, especially as you've alluded to in a pretty busy week. So looking forward to getting your take on the news. Also joining us and making an exciting debut on the podcast is Mandy Beech, Director of Retail Services at Nationwide. Thanks for joining us, Mandy. Always great to have another face on the show. You've also had a busy week, which we'll discuss later, but could you introduce our listeners to yourself and your role at Nationwide, please?
Yeah, same for me. Thank you very, very much for the invite. I can't wait to have the conversation today. So, yes, I work for Nationwide Building Society, and my role is predominantly to deliver to the frontline services to our customers. And that means looking after our branch network, 606 branches, our contact centres, our back office, so digital, social, mobile, chat. So really getting the opportunity to be as close to the customer as I possibly can. And that's through the delivery of that through our frontline teams.
Awesome. I'm sure you have a ton of super interesting perspectives to share. So thank you for joining us and looking forward to getting your take on the news. And last, but by no means least, we are delighted to welcome Uneesa Zaman, CEO of UneesaFinance. Thanks for joining us, Uneesa. Great to have you on the show. Would you mind giving our listeners a quick introduction to you and what you're working on, please?
Absolutely. Thank you so much for having me. So
As mentioned, I'm CEO of UneesaFinance, a financial literacy platform dedicated to providing financial awareness to Muslim women globally. So we're based in the UK as well as markets across the Middle East. And we've served a plethora of different women across the globe, but more specifically working with fintechs and government institutions in terms of delivering that level of financial awareness. To date, we've helped over 10,000 women learn more and increase their level of financial awareness, working with institutions like UN Women and the World Economic Forum.
What a fantastic resume. Well, thank you so much for joining us and looking forward to getting your take on the news. And with that, let's get into the news. Our first story we've taken from Payments Dive, but we've seen it in lots of places as well. Orum launched first of its kind account verification tool for America's FedNow. Verify is the first ever product built on top of FedNow, the instant payment service launched in July by the US Federal Reserve. It allows businesses to determine within 15 seconds whether a bank account is open and valid before initiating payments. It also provides real-time data as to why an account may have failed. An Acuity study in 2020 revealed the cost of failed payments to the global economy could be as high as $118 billion. Orum and FedNow hope to challenge this by revolutionising the account verification process in the US. Stephany, obviously going to come to you first on this. Can you tell us a bit more about exactly what Verify is, how it works, and why you're so excited about it?
Sure. I mean, as you said, we are very much revolutionizing something that here in the US has been incredibly outdated and challenging. So this week, we are excited that we launched the first ever to market product built on top of FedNow with our solution Verify. This patented technology verifies business and consumer bank accounts within 15 seconds or less and determines whether the account is open and valid before initiating payments. Now, traditionally, and frankly, currently, businesses have used a range of antiquated solutions to verify bank accounts, including incredibly slow micro deposits here in the US, typically takes a couple of days or more, batched historical data, which is really yesterday's information when I need to know something right now, and then the manual entry of, end user login credentials. How many times have you had to reset a password when you're trying to figure out bank credentials? All of those things inject a ton of friction and frankly cause a lot of problems in terms of account verification. Any one of these processes can take days. And in many cases, there's a low fidelity of accuracy. So it leads to, as you just said, failed payments. And failed payments themselves cost the global economy over $100 billion each year. So that feels like a place to really spend time, right? Because these are preventable problems. Now, alongside that, the launch of FedNow, which in the US is a brand new payment rail we're going to talk more about, has allowed us to build a new technology. So this isn't just about moving money faster. It's about putting new tech on top of those faster payment rails to leverage the new capability and provide real-time account information to businesses. What I love about this is this really rich data layer so that when you do a verification with Verify, there's information in the inquiry that helps us determine what's going on. What's the status? Is the account open or closed? Why was it closed? And more rich information than you could possibly have had in the sort of current traditional versions of things that folks are using today. So naturally, we're really excited. We're also thrilled that Verify will cover 100% of all US-based consumer and business bank accounts. Coverage has been a massive challenge. And so this is a big step forward in the industry, especially where invalid credentials, friction, and fraud are really painful. And we're just incredibly thrilled to be on the tip of the sphere of next generation innovation and building on top of what is very new to market here in the US in terms of FedNow and instant payments. So lots to come in this arena.
Yeah, no, it's a fantastic achievement. I suppose I'd love to understand whether you've wanted to build this capability for a while, but previous rails haven't made it possible. Like, as in, are you launching this now because FedNow's here, or kind of have you been planning to do it for a long time and the stars have just aligned kind of the two things? What kind of came first, the idea or FedNow, I suppose?
Well, the idea has been one we've been thinking about because as folks who focus on instant payments and payments broadly, we have a unique insight, which is what do our B2B and business customers struggle with the most? And one of the things they struggle with is account onboarding. Like actually people sometimes still have stacks of canceled or voided checks. And that's their means of sort of onboarding an account for payment verification. So there was just such a signal from the customers we were working with. And yes, we have another, instant payment service here in the US called RTP. It's been around since 2017, but really only in recent years has it been sort of more broadly adopted. But what we love about FedNow is that it opened up capabilities with smaller local banks in communities across the US. Not everybody in the US banks in the top 10 or 20 or even 200 banks. And so for Verify to be as successful as it is at launch and to really have broad reach, we thought it was really important to align the stars with not only instant payments broadly, but also systems like FedNow that are reaching a much broader and really important population. So increased accessibility enables consumers and businesses in these communities who bank with smaller organizations to more fully participate in our financial system, right? Not just instant account verification. And for me, I'm actually a certified financial planner by training. This opens up so much more opportunity for financial inclusion. And it's one of the reasons that we get really excited.
No, understandably so. And I guess, what have your learnings been from the process of building on top of this new rail, right? Like, as you said, you're the first people to build product on top of it. I don't know if any of our other listeners are sort of sat there with ideas for like things they could build on top of FedNow, but like what have you taken from that process? What has it been like to work with them?
Well, if you back up in time, FedNow actually just came into market, right? And so RTP's been around a little bit longer. And one of our learnings is that people were assuming RTP and FedNow weren't useful for a variety of reasons, because either they have, coverage challenges, they're not in every bank, or maybe, the way you would do a sizable transaction that might otherwise go on a wire would look different. And so there's been some resistance to thinking about them as new and innovative. And we saw that resistance as opportunity because to date, nobody else has built anything on top of these systems that isn't simply a money movement solution, right? Plenty of businesses now, luckily, are starting to pick up and want to move money instantly for a variety of reasons. That time to money problem we obsess about, it's getting a headline moment. But what hasn't happened yet is actual innovation in financial services to change the way current behaviors and activities work. And so our learning is that when somebody leans out, that means there's an opportunity that nobody else is seeing. And being first in that opportunity is a huge advantage, in particular because we're in a position to patent and have patented how this technology works and have that first mover advantage of working really closely with the folks that built this system and be able to get closer to the metal, so to speak, on the data layer and other pieces that really drive value in the product that we're building.
Yeah, no, absolutely. I can totally see the value in that. And from what you've described, it sounds like your solution has a lot more sort of data complexity. We have confirmation of payee in the UK, but this feels like a sort of slightly smarter version of that. But Mandy, from the UK perspective, have we seen impact from things like confirmation of payee? Do you think has that changed experiences for your customers on the ground?
It is interesting when I hear you talk, because I kind of walk immediately in the shoes of the customers that are on the receiving end of this. And what I can tell you is that kind of walking in and opening any kind of service, product, whatever, is people want everything at the touch of a button now, don't they? When you talk about that kind of speed, we shouldn't underestimate that from a service perspective. It's really important. Accepting that you've got all the necessary checks as you describe. So I'd love to hear a bit more about this one over time. But confirmation of payee, trusting where you're sending your money has never been, something that is on everybody's minds. And when you talk fraud, that education point is being critical. The thing that we've had to really make sure is people are reading, like those disclaimers are there to protect. And you can become blind to them over time. So it's really, really key that we're dropping in, regular reminders to do it. But confirmation of payee has been what I would describe as a game changer from a security point of view and trust. It's been super important. And we do loads around fraud education. But when you hear, what you're describing there, Stephany, it's really, really key that we continue to evolve to keep people as safe as possible.
I think that's exactly right? Trust and safety. When we're talking about payments, so often, especially here in the US where we've just had limitations, the sender and the receiver haven't communicated about the exchange of funds that's about to happen. And the other mechanisms, to your point, Mandy, they're not consumer first. They're not experience first. They're slow, antiquated. So we really had to look at two sides of a coin, which is solving a $100 billion pain point, but also doing it in a way that's seamless, frictionless. There's no user involved in a process like this. It is instantaneous. And I think elevating the trust, safety, and security and certainty of an account is so critical. And now it's alongside all the work that's being done in the US for identity and KYC and other things. It lives at the account level in terms of verification, but it's an important input in basically any financial transaction.
Uneesa, I'd love to get your perspective on this. Like, what's been your impression of FedNow more broadly and kind of the offering that Stephany's described?
I think it's certainly an exciting time. I mean, I can speak to what's going on in the Middle East with regards to RTP more specifically, but also the offerings that are sort of trickling down from the US and elsewhere. It's an exciting market to be working across. And I think these offerings are really expanding the horizon of what fintech looks like here, and also access to finance. And when we talk about financial inclusion, I think when we're looking at different markets, it looks very different globally speaking. So I think the access to the finance, I think the element, and something that's really interesting actually to tap into, is how these systems are used in said markets. So for example, the infrastructure in the Middle East and more specifically across the GCC looks very different to, say, the UK or the US. So having networks, having systems that are very much integrated are incredibly important to allow for the sort of emission of fraud or things like that can occur. And I think obviously when we think about fraud, there's certainly been very high levels of such over the last few years in markets like the UK, in tapping into sort of having that access to finance of the vulnerable, of the elderly and such. And that's something that certainly is being looked at across these markets, but also being tackled at a very top-down level because of the integration of the government in systems like this as well.
Yeah, no, absolutely. Stephany, I suppose when it comes to the US, the thing I'm always interested in from a kind of cultural perspective is this tension between like the private and the state, the private sector and the state. You kind of see from an academic perspective, surveys seem to suggest that trust in government is like at an all-time low. But, we've got this launch of this massive, potentially game-changing federal system. So how much is that impacting, do you think, customer uptake of products like FedNow? Do people kind of see Federal Reserve offerings as separate from the government? Like, can you talk us kind of through kind of that nuance from an American consumer's perspective?
Well, it's very interesting from like an American consumer perspective. I bet if you surveyed 100 Americans, they've never heard of FedNow unless they work in payments, right? So I think it's one of those things that like you get used to writing a check, you get used to having a bank account, you get used to being able to swipe a credit card, and you don't necessarily think about, is that government owned? Is it government controlled? And so I think with FedNow in particular, and again, RTP has been around for a few years, its ownership structure is different. It's owned by the top 20 banks. I guess it's a big question. Do you trust the top 20 banks more than the government? I don't know. Not for me to speculate on, but I don't think that consumers think about it as government owned. I think what consumers think about is, hey, Amazon can get me a package same day. In a lot of cities, under an hour. I can get a massage on demand from an app in my home in most major cities. I don't really care how you do it, but I need access to my money at night, on the holidays, on weekends. And today, the system is 9 to 5, Monday through Friday, because it's tied to banking infrastructure. So I don't think the average American is thinking so much about who provides it. They're just thinking about, how do I get access to it? And that I think is important because it's showing that there's an incredible demand and frankly necessity from a liquidity perspective and from a safety and security perspective, from a financial, balance sheet, opportunity for each household to not think, wow, if my money could earn more by being saved or invested, I should do that. But one of the reasons why I wouldn't is because on a Saturday, if I did have an emergency and my money was in a high yield savings at a bank somewhere other than where my checking account is, I couldn't get it out. So it's really solving systemic issues. And I don't think that there's, fortunately, much consideration for the current, who's making it work question, so much as it is, can financial services meet me where I am? And can we get away from this 9 to 5 sort of mindset where money's locked in a vault, only available when the bank feels like giving it to me?
Yeah, no, I 100% agree. I think it's one of the things that sometimes is almost hardest to, we work with lots of banks all the time and kind of our ventures work, and it's one of the hardest things almost to communicate sometimes to senior stakeholders, like the urgency sometimes that people need money. Like not everyone has these big reserves of cash to kind of fall back on when times get tough, and being able to move and access money instantly can be life-changing. So I'd love to chat about this all day. You guys are doing super, super interesting work, and fingers crossed kind of for the future of the launch. It sounds like you guys are going on to great things, but I'm going to have to move on to our next story now. The next story is taken from the FT, again, has been covered in multiple different places. This is Metro Bank find a £925 million rescue deal. The troubled UK bank has found £150 million of new equity on top of £175 million bail-in note issuance and £600 million of debt refinancing. The new equity comes from Colombian billionaire Jaime Galinsky-Bacall, raising his 9.2% stake to 53% and becoming the controlling shareholder. Following the move, the PRA issued a brief statement saying it welcomes the steps taken by Metro Bank to strengthen its capital position. The bank is now reportedly looking to sell up to £3 billion of residential mortgages with interested banks including Barclays, NatWest, Lloyds and Santander. Critics of Metro, including its co-founder, point to their unsustainable reliance on a branch network. However, new controlling shareholder Bacall rebutted this in a recent interview with the FT, saying it's a model that works. Uneesa, where did it all go wrong for Metro, do you think?
I mean, I think when we look at it from a perspective of the fallout, what's happened and taken place over the last week, we can definitely certainly look towards the share price. For example, it's fallen from 53% in 2018 and a further 95% in 2019. And that largely happened as a result of the accounting scandal. And I think when we look at sort of the issues that Metro Bank has faced over the last 5 to 6 years, it has been sort of a merry-go-round of scandal, of sort of holding that down and then sort of, okay, we're up against it again, and it's sort of taken place. I think the issue that we're facing right now is the sort of what's going on the ground in terms of the cost of living crisis, the mortgages now having to sort of being reported to be sold to interested banks like the likes of Barclays, NatWest and such. And it's sort of, as a bank that sort of held itself as a bank for the people, a champion of the people, I think that at its crux, that's where Metro Bank has gone wrong. It's how it's sort of delivering for the people and what that looks like, and coming together with that level of honesty to the people rather than what's taking place in front of our eyes, unfortunately.
Yeah, no, it's a really complex one. I think, as you say, it's been like a sort of drip with Metro Bank over a prolonged period of time. Mandy, what's been your perspective on this? Obviously, the news has been coming out over a couple of days now. So have you been following it? What's been your take?
Yeah, I mean, I'm following it from the perspective of, we care deeply about the high streets. I mean, part of the position that we're in nationwide is that we do back our branch network. And we do that for the communities that they serve as much as the services that they provide. And so when I look at, the Metro banks on the high street, it's sad that there's going to be a scrutiny placed upon them. But they've done some interesting things in their branches. They've been very, very innovative and not made a secret about that. But we've got colleagues that, I've got colleagues that work there. So I'll be really disappointed if, they can't turn the situation around, because it matters. They've got some fabulous locations and high streets that are very, very dominant. And we hope it can stay that way.
Yeah, I mean, I understand. I think they've currently got 76 branches, and apparently they're still planning to open 11 new ones in the north of England by 2025. So yeah, it's really interesting kind of to see kind of whether they stay on that trajectory.
I think when we think about the branches, I totally agree, and I hear you, Mandy. I think there's certainly many exciting things that they have brought to the high street, particularly under the sort of umbrella of so many different banks have been shutting down branches over the last decade, over the last 15 years or so. I think the issue sort of to hand is, what is that offering to the customers, and how can they remain competitive and whilst simultaneously battling all these different issues? I think the wider sort of idea and discussion to really be had is the idea of transparency. I think when we had the financial crash back in 2008, fintech really took a rise in sort of being a champion and a bastion of the people, providing a level of innovation. And that was sort of what Metro Bank were jumping on the bandwagon of. It's sort of, we're providing something new, we're providing something innovative, but also giving you the comfort and the reliability of a branch, of knowing what you know in terms of traditional high street banking, but giving you something different and giving you something that's a little bit more innovative as well. I think it's about sort of keeping up with that pace, and whether that can be done in a way that's can be easily integrated into today's society, because what was sort of new and innovative, say 10 years ago, is not the same today.
Yeah, no, absolutely. And I suppose as a survey research nerd, I always love looking at the independent service quality survey that we have in the UK. I think for international listeners, this is a kind of big study that is undertaken to really kind of benchmark the services of the main financial institutions in the UK. And Metro tops one of the questions specifically is around branch services, and Metro comes top of that one. But there's also a specific question around sort of online or mobile services, and they come 10th in that one. So to me, that is the real interesting nuance to it, is they excel in one specific area, but comparatively really struggle based on that survey data, but at least in the other. I mean, I don't know, Stephany, is there anybody like this in the US that is kind of still really betting on this in-person experience and sort of struggling in the online space?
It's a really interesting question. I think, first of all, I think speaking for the U.S. specifically, and what we've seen in terms of bank rescues, I can say there's, we've had our share of fragility in the market too, but we've definitely seen the contagion risk slow down. So I think that's good news. I personally hold the opinion that small regional banks are critical in reaching underserved populations, and so maintaining customer confidence, number one, is particularly important, and some physical footprint. What I think probably the bank that is most like half digital, half in person in the US is Capital One. And they've really grown through acquisition of small community banks so that they have the footprint, but they do a lot online as well. And I don't think it's ever been clear that one's going to beat the other. I think they're fundamentally different. And so as Mandy is going to talk about, rebranding, but also being committed to branches being maintained in a location, in the US, I think one of our challenges is that we have thousands and thousands of banks, and perhaps there's going to be a consolidation, but the physical footprint matters for a variety of reasons. Will we have less and fewer locations, perhaps, as people get more confident with digital? But there are things that you can only do inside a bank branch, like a safety deposit box, and those things are still valuable. So I'm not sure that the answer is clear in the US market. What I can say is we definitely see our fair share, like Uneesa said, of fintech interest. And I think that's driving people to come back and ask this important question, which is what creates a stable bank, right? What do I need to know about the fundamentals of the bank? And honestly, the truth is banks primarily are a derivative of trust. There isn't a dollar for dollar reserve. There never has been. That wasn't ever the design in the US or anywhere in the world. And so trust and I think is it at an all-time high in terms of importance and priority.
Yeah, no, absolutely. And I think that point you make around branches being especially important to certain groups is something that comes up time and time again on the show. I thought it was particularly interesting back when I first started working at 11FS, so quite back in 2019 or so, we were talking a lot about something in the UK called the RBS Remedies Fund, which was as a result of the issues that NatWest got into, there were big funds that were being allocated, and Metro Bank was a recipient initially of the largest amount of money that the government sort of issued as part of that process, which was intended to increase competition in the business banking space. And a large part of Metro Bank's submission was that they were going to open, I think at the time they pledged to open 30 new branches, really kind of focusing on kind of the importance of digital plus in-person services for small business owners. So I think that was kind of, to me, a really specific example of in the public domain, people kind of recognizing how important branches are to particularly kind of small business owners. And again, I look back and see Metro Bank had to hand back a substantial chunk of that funding because they couldn't actually deliver on those pledges. And to me, that almost seems like one of the first kind of visible signs that they were kind of maybe committing to things that were too ambitious or kind of not quite having the right balance between kind of the stretch of their strategy and their ability to deliver on it. So yeah, I think it's a really, obviously you hope that they do well. Mandy, do you have any Mystic Meg anticipation of what you think they'll do next or where they'll go from here?
It's a really difficult one to call, isn't it? Because I think we are in different times now, and let's see. But I think you hit the nail on the head, and this is something that I'm, really championing, is that whilst we may be backing at Nationwide, the branch, it forms part of a system for a customer, and it can't be the only thing you back, because it has to be the digital experience. And for us as well, there's a role for telephony and there's a role for chat. So all of that combined makes up the experience that people will trust and and want to be a part of. One element alone, I think, is going to be tough. But let's see. And as I say, I like you, I really hope it can turn around.
Yeah, absolutely. Okay, well, we're just going to take a quick pause here. We'll be back shortly.
Hello, it's Benjamin here, Director of Research and Strategy at 11FS. Earlier this year, we published Building the Future of Home Buying, a report that calls out financial services for making the biggest, most significant purchase of most people's lives way more difficult than it needs to be. Well, fast forward to today and things haven't changed. Mortgage offerings are more important now than they have ever been, with sky-high interest rates in many countries forcing home buyers to shop around. We've got clients asking us how to move quickly to fix the problem and get a game-changing product to market. Want to know the secret? Step 1, download the report at 11fs.com/homebuying. Step 2, get in touch at 11fs.com/ventures. Speak soon.
Welcome back. Before we get into the second half of the news, a note to go check our most recent FinTech Insider Insights show. 11FS's own CEO David Embria and CTO Ewan Silver have a fireside chat to unpick what we mean when we say the services have fallen out of financial services. That might seem like a kind of strange topic, considering you can't have financial services without the services. But at 11FS, we believe there's a real service gap in the industry where companies have fixated over products or customer numbers or data rather than the customer themselves and how best to serve them. David and Ewan discuss how businesses can enable themselves to put the services back into what they do and the challenges facing them. So go check out that podcast in our podcast feed. It's the one just below this one. Let's get back into the news. So our next story, we've taken this one from Creative Boom, but again, lots of coverage all over the place. Nationwide unveil biggest rebrand in 30 years. Britain's biggest building society has unveiled its first major rebrand in over 30 years in a bid to challenge shareholder-owned banks. Nationwide's mutual status means they are member-owned, and earlier this year they shed £340 million of profit by giving 3.4 million members £100 in cash. The new look Nationwide logo drops the capital N and removes Building Society from its branding. Nationwide have also renewed their branch promise, saying if we have a branch in your town or city, we'll still be there until at least 2026. The rebrand follows a similar exercise from Wise earlier this year and coincides with a refresh from Revolut to coincide with their launch of the Revolut 10 app. Nationwide currently has over 16 million members and a £272 billion balance sheet. Before we have a quick chat about this, let's get a reaction from our own Will Jones, Executive Creative Director here at 11FS, who had this to say.
So rebranding an incumbent bank or building society in the UK right now is a pretty fine balancing act. I think at a very, very basic level, retail customers already understand a bit of the design shorthand for, I guess, traditional and trustworthy versus new intelligent service. And I think we see the trends around usage and wallet share follow suit. I think the rebrand for Nationwide has been pretty successful in striking this balance. If we break down some of the elements, let's start with the logo, the actual emblem there. It's lost a bit of personality, but it's gained a lot in versatility. I think any rebrand has to make that work as a beautiful app icon, much the same as 10 foot wide on a building. And I think we see from this, like we have from other brands who've been around a while and rebranded, like Burger King, they've actually looked to the past when finding a simpler type treatment for that word mark, and that's a nice nod to their heritage. I think it'll be interesting, though, to see how that vibrant secondary palette is actually used, to see whether the illustration style that feels new now still does in a year or two. And I personally, as someone that's worked with brand guidelines, really hope there isn't one of those pesky brand rules that now presents the use of an uppercase N for Nationwide.
Mandy, obviously, we've all got very excited about the kind of like brand and design nuances of this, but would love to get your on the ground perspective of what the impact is for Nationwide as an organisation. You've had, as we alluded to, I think the same branding now for I think, around over 30 years. So why is now the right time? What is it that you're looking to achieve?
Yeah, I mean, what I would say is this has gone down extremely well, internally and from the customers that we've spoken to so far. It's been really, really well received. And I suppose ultimately what you want from any rebrand is to make sure that you're relevant for the 16 million members that we've already got, but we're also looking forward to those that we want to gain. And that has been a very deliberate move on our part to make sure that the service, the trust, all the values that we've got today remain very relevant for those new customers that we want to attract as we go forward. So there's definitely been a real nod to modernity, relevance, and at a time where we are putting our branch network front and centre, but absolutely as part of the system that I described earlier of a great digital experience, really brilliant colleagues that help customers at a time when they need them. So the brand relaunch forms part of kind of 3 or 4 almost signature pieces that we want to deliver. And some of that has been the fairer share that you've described there. And that's the reward back to, those members that hold current account savings, current account and mortgages, and really committing to the fact that we are owned by our members. And therefore, every single penny we spend, everything we do is in service to them. And we are really, really proud of that. And what this was always designed to do was, create a new conversation, which it's definitely done, and make sure that relevance point comes through really strong. And it looks to have done exactly that.
Yeah, no, I have zero design expertise, but I think our design team have been super complimentary about it. I suppose the thing that I'm personally really interested in, I've had the pleasure over multiple years now of chatting to people who work at Nationwide. I know how genuinely passionate people are about the fact that you are a building society. I wonder how you've dropped that explicitly kind of from the brand. So to me, that seems like the most interesting part. I'm sure that wasn't an easy choice. And what do you kind of see as the trade-offs of that being? How do you kind of still communicate that through to your customers?
It was interesting because obviously as part of any brand refresh, you do, an immense amount of research to understand what matters to some and what matters to others. Being a building society matters hugely to all of us. And if you speak to anybody at Nationwide or if you speak to the customers, they'll be able to tell you that in the way that you've just described it too. Building society on the logo has only been on for about 5 years. Actually, of the 36 that we've had, the logo, building society only is relatively recent. And dropping it is simply to say that it actually matters more to some than others, for sure, because ultimately some people would say, I want to be part of the building society, but I also want great service, great value, great products, great digital experience. And when you look at it, the kind of the logo, the simplicity point was absolutely critical. And so dropping it is never not about talking about being a building society. It was more about staring at the logo, recognizing it first off, and almost making it, as I said earlier, much more modern.
Yeah, no, absolutely. Stephany, I don't know if you've had a chance to have a look at it. I mean, what was your take on the rebrand?
I did take a look.
And I suppose, what Mandy's described in terms of the role of a building society.
Well, listen, I think part of rebranding is continuously redefining your identity relative to your customer base, which to me, this is very much what the intention was as I listened to Mandy talk and as I look what was done. And a rebrand doesn't necessarily mean the fundamentals change. So what I love about it is finding ways to make it easier for somebody to find what they're looking for, know what you offer in terms of financial services, potentially do more with the bank than the single thing they might have done previously. Because the consumer mindset changes over time, the necessity of staying relevant topically and being able to engage a customer thematically around how they think and talk about the financial products in their lives, it does require periodic reinvestment. I've seen many brands in the US, steadfast 150-year-old companies, some of them mutually owned, some not, in financial services do the same thing. And I think it's really transformational. Now, sometimes it'll go alongside with either new commitments or new products, and that's interesting too. But the identity of a company, while it may still have its same pillars and values, is evolving as the identity of the consumer changes. And that's something that is, I think, actually in some ways happening faster than it ever did before.
Yeah, no, I think that's a really, really true point. Uneesa, what's your verdict?
I love it. In short, I think
that's very short.
in short, I think in practice, in my past life, I've worked in marketing. I've worked also in PR, and I've managed very large clients. And part of that is also redefining what it means when it comes to financial communications, what it means to be a brand that's relatable, that's accessible, that isn't alienating the initial base, but is also incredibly inclusive. We're looking forward, not backward. And I think the fact that, you know, it's such a beloved part of the high street nationwide. It's really community-based, community-focused. I think that's clearly very evident in its profit sharing as well. And I think it's a really exciting, bold way and dynamic way of really reaching out to their core customer base and saying, look, we're here to stay. We're still as relevant as we always were. But it's also about reaching that hand out and taking more people on that journey as well. So yeah, I love it. I think it's great.
One definite convert there, Mandy. I suppose that when we teed up the story, we framed it as, you know, a move to compete or to kind of, you know, increase your competition. Is that fair? Is that a fair way of positioning it, or is it less about competition and more just about you guys looking at yourselves?
Oh, no, look, seriously, we want to be seen as a genuine competitor because we've got the scale to those that are already out there. And we do see that. And certainly, as we've seen, you know, volumes of closures, it's really surprising that, you know, everyone would say, you know, as banks close, people don't want an alternative. Well, actually, at a time of need, that kind of real moment of truth, we talked earlier about fraud or whatever that might be, actually going in and seeing somebody face to face, regardless of age, actually, is really key. And so that point of reassurance of having a branch is not often that I want to go in all the time, and because generally people don't actually. But I do want to know that when I need you most, I can come in and see you. And so this kind of idea of a good way to bank, which is something that we're standing behind, is twofold really. It's about offering real value, brilliant service, great opportunity to be a member and enjoy what a membership offers, as well as doing good. You know, being on a high street and making sure that you're supporting the communities. The social investment part is key in that context. So, you know, we definitely do not want to lose what we bring to a community, as well as being a very relevant choice for people to come and join us and enjoy, you know, the offering, because we offer brilliant products. You know, we don't want to be seen as just mortgages and savings. This is way beyond that, absolutely way beyond that. And so the commitment to branch is definitely about kind of that point of differentiation and distinction at a time when others aren't committing to that. And we can do that because we're a mutual, and we can, you know, make different decisions because of we don't have a shareholder. And also the way our property estate is made up allows us to make different decisions from that perspective. So, you know, I feel very blessed because I see our branches are vibrant, they are busy. What I don't see is kind of, you know, soulless offices. Quite the opposite, actually. And the volumes of accounts that we're still opening face to face, you'd be surprised about over a third of new accounts are opened in branch. So most people would think it's a digital offering, and for some it still is. But there's still a group of people that still want to walk in and be seen face to face, which is fascinating, really.
Yeah, no, that's really fascinating. I mean, like, so you say a third of accounts are still being opened in branch. Are there any particular? Does that skew to either like any particular types of customers or any particular types of accounts?
I think you would assume that it would be kind of loaded towards more vulnerable, those that need it most, maybe the elderly. But actually, we don't necessarily see that. We do see, say, kind of a typical 11-year-old really enjoying that first experience of going into a bank with their mum and dad, you know, opening up their first current account. You know, don't underestimate that. And interestingly, we were looking at the data in a very short space of time. The branches have saved our customers from losing £4 million worth of their savings to fraud because of the way they've intervened. Because it's much harder when you're in front of someone, they have instinctively they know something isn't right, as well as all the necessary checks that they do. They make a real difference. And so we're definitely, you know, don't make no mistake, what you do in a branch today is different to what you would have done in a branch even 3 or 4 years ago. So we're not immune to that. So what I mean by that is it's not necessarily your traditional cash in, cash out type transactions. We're definitely seeing more digital conversations, more education in that context. So we've had to multi-skill our teams in order to respond to that, and they've done that brilliantly.
Yeah, no, that's not surprising at all to me to hear, but no, I think it It really resonates. I'm already, probably marks me out as like a finance nerd, but I'm already excited about taking my son to open his first account. But he's only 2, so I don't know. Maybe by the time he's old enough, will branches still be there? I don't know. I really hope so, because I can still remember going in with my parents.
Absolutely. I can remember.
Definitely.
Yeah. I can remember walking to the branch that was like near my house. That's how close it was. I remember getting my checkbook. I remember the whole experience. Now, maybe that's because I like live and breathe payments and financial services, but I think most people remember that. And I feel this conflict, in the US, we have some new platforms, Greenlight, Step, that are really designed for kids. And I want to enable my kids now. They're 6 and 8, my daughters. And I'm like, do I walk them into the branch? Because right now I can't walk to one. Or do I do this digital thing? And I think, honestly, there's going to be a combination of both. I think that's the new reality, right? You won't necessarily exclusively work with a single financial partner. I know even now I don't. So I think it's just going to be real interesting to see when 2026 rolls around, Mandy, what you're talking about, in terms of the physical piece.
I think that's fair. It's been interesting because we've been doing something called money lessons, which is where we go out to schools. So this is our branch colleagues go out to schools. They've talked to about 70,000 children now. It supports a curriculum. You'd be surprised how I think there's an assumption that, probably on some of our parts, that your kids know more about money than they do. And actually, when we go out and we talk to the children, and the idea is to intervene on, say, gambling and making sure that they understand that, looking after money, saving is important, fraud. And it's been a really, really, it's been brilliant for the branch teams to get involved in. But again, it's kind of that giving back. And I think that the more we can do of that, and that's where, I do think a blend between physical and digital, I think that's your sweet spot, really.
Yeah, no, I think it's super, super important. Again, I think we could probably talk about this for the whole rest of the show. Sadly, I think we have to move on, but kudos to the team. Mandy, congrats on the role. I'm sure it's been a very busy week, so fingers crossed it has all of the impact that you hope.
Thank you very much.
Our next story comes from FinTech Futures, and that is Flus, probably pronounce that disastrously, partner with Tarabut to launch an open banking digital lending service in Bahrain. A new partnership will see the launch of an open banking enabled income verification product offered by Bahraini lender Flus. This gives institutions direct access to customer income and eliminates the need for customers to submit salary certificates. The Dubai-based Tarabut says it's the first open banking digital lending service in Bahrain and hopes this will drastically improve the process in the region. Flus was a partnership between MasterCard and Payments International Enterprise. Launched in 2022, it is a digital-first lender offering short-term personal loans without the need for a bank account. Uneesa obviously probably butchered all of those names in the introduction. So
no, you did fabulously.
Oh, thank you very much. But apart from pronouncing things and helping getting things right, I mean, can you talk us through this a bit more? We're seeing this kind of thing as more commonplace in the UK, the US, other areas, but how big a step forward is this kind of offering in Bahrain?
Yeah, I mean, thank you so much. I think it really purports to be such a major key player of what sort of the landscape of fintech looks like here. I mean, something that sort of I think we don't really sort of touch upon enough is having a comparative analysis and study of the fact that the Bahraini population as it stands is 1.4 million. I think when we look at the GCC collectively, it stands to be something around ballpark 70 million. So it's sort of more or less the population size of the UK. I think when we're looking at and looking forward at what this brings, and in terms of putting a step forward, I think it's a huge deal, largely because it's just sort of paving the way to better informed access for a larger number of people. And in doing so, it means that we're increasing financial inclusion, but doing so in a sort of sustained manner. The way these systems work across the GCC look very different to that of the US and the UK, and I'm sure we're going to tap into that later. But it means that people are able to make more informed choices. And the idea of sort of encompassing lending into that now is sort of moving the dial and the trajectory of what fintech looks like here in terms of having a sort of one-stop shop And that's the way things are going with regards to fintech and finance. So having access to things like lending, investing, personal finance, having a checking account, for example, or a savings account. So it's really moving at a very fast pace comparatively. And I think that's largely not only because of the support that the Central Bank of Bahrain has been able to provide, along with other institutions in the UAE, but also thanks to sort of the idea of having a smaller population with very similar demographics where you can have that level of rollout and escalation in such a way.
Yeah, no, I think that's super interesting to kind of understand the context of both Bahrain individually and the region as a whole. Yeah, when I first saw that stat around like 1.4 million people, my brain was just like, how does anything? It's just such a mad like population to have to launch something for. I suppose one thing I'd like to pick your brains on is when we gloss over it and we think, short-term lending, no bank account needed. You could probably imagine people's minds jumping to kind of things that have had similar structures in the past that maybe haven't necessarily been the best financial products. You have pretty bad rep in some of the UK and the US, some of these types of like short-term lending, no bank connections. I'm assuming Flus is different to that. Like, can you talk us through like how are they going to make that work in the region? They're treading new ground, right, as well. So how do they manage that space between making lending easy but not lending where they shouldn't?
Yeah, totally. And I mean, it's completely understandable when we look at sort of, for example, the infrastructure surrounding sort of payday loans, with the idea of sort of getting money quickly with very few checks and balances, and sort of the fallout and repercussions of that, just from a societal level, it was disastrous entirely. And I think when we look at that and sort of comparatively, as I mentioned, the sort of government support that initiatives like Flus have is sort of, it's very much an integrated part of the system, and there are very many checks and balances. I think when it comes to sort of making loans accessible without encouraging irresponsible lending, there are certain sort of hurdles in place to ensure that doesn't happen. So we're talking about things like client profiling. We're talking about things like the current debt of the individual, of the customer, and what that may look like, what their sort of checks and balances are in terms of their payment plans. So a key example for a customer in the GCC or sort of in Bahrain, the UAE, etc., would be if a check were to sort of bounce here. Let's say you were paying your rent and the check bounces. That would then signal something into the wider integrated system that something's wrong, and that actually then gets highlighted to and is sort of flagged with regards to the government. And it's, as I mentioned, it's largely because the population here across the GCC is quite small for each country. So an integrated system is a lot easier. So the trickle down of, let's say, government support or a central bank supporting a fintech, for example, gives room for sort of a level of accessibility, but adoptability as well. So people can sort of breathe a little bit easily in knowing that it's been co-signed by a government entity. But at the same time, it also means by integrating that government, there are sort of massive repercussions to not being able to pay something on time as well.
Yeah, no, absolutely. I can sort of start to imagine, I think. Yeah. Stephany, obviously, we've been talking about income verification. You guys launched Verify. Is this something that you're kind of listening to and thinking like, oh, we could do this? What's your thoughts on income verification as an offering?
Well, interesting question. I'm a certified financial planner, so I started my career thinking about financial advice. And so many financial products are derivatives of income verification, which I think is important. However, the status of your income and that it's valid and that you have it changes minute to minute, right? And I've seen so many circumstances where folks are at the closing to buy a mortgage or to get a loan, and they need a favor from someone to still prove that they have income verification. It's like underwriting, I think, has a fundamental flaw in that it presumes the facts persist, right? And so I think there's a fundamental challenge in the US globally of the fact that people don't as often stay in the same jobs they were in for 5 or 10 or 20 years. Job continuity, economic impact, there's lots of reasons why income verification isn't always the answer, at least in its entirety, to determining if you're underwriting properly and if there's certitude in the ability to repay. And then on the other end of the spectrum, you've got folks like my mom who's retired, who doesn't have any income, but could absolutely repay a loan. And so there's just these black box areas that I think are challenges. Nonetheless, I think, seeing the opportunity in developing countries and emerging countries to actually begin to have a sort of stable layer of financial infrastructure that could understand and catalog activity, behaviors, data for better decision making, it's really powerful. So I think there's just a lot of complexity at the heart of a question as simple as income verification.
Yeah, no, for sure. I think it's one of the really interesting dynamics of this split that we're seeing in financial services more broadly now as well, that, you have, just looking at the UK, for example, I have my salary comes into a fairly traditional bank, sadly not nationwide, Mandy, I apologise. And then I pay my bills from that account, and then I move my fund money out to a fintech where I can transact easily, share money, move money easily. We've seen this trend, I think, increase in the UK and elsewhere. So for me, it creates this really interesting dynamic where banks have this sort of view of the salary as it comes in. They can see my income land, whether that's monthly or if you're earning in a different pattern, and fintechs can't. And you're seeing this kind of split between like the banks that have the income information or data, but don't necessarily always have the data structures or the intelligent data structures to kind of analyze and crunch that. And the fintechs, again, massive sweeping stereotypes here, who quite often have smarter data structures behind them or ability to crunch data, but don't have access to their salary. So I think it's a really interesting split that we're seeing in the market. Mandy, I don't know if you have any perspectives from a nationwide. You guys do have an interesting position, I assume, as well, where you probably have more people paying their salaries into a nationwide account.
Yeah, and what we know is that kind of depth of relationship really matters, because for all of the, what you've just described there is you wouldn't be able to have a loan with Nationwide unless you had your current account, because we want you to experience the full relationship. So it's an interesting model that is being described. But I do recognise what you're saying, where, depending upon various age groups, they'll almost have their main bank account and then maybe another one to play, as you describe it. So that isn't an unusual model now. And therefore it does put pressure on, all of us as financial services providers to make sure that you are offering ease of payment, because that is generally what is forcing others to consider elsewhere. What is easy to do that might not be with their incumbent provider.
Yeah, no, absolutely. I think similar to our chat around branches and coming back to kind of chat about that in 2026, maybe we should leap back down to this one in 2026 as well. Okay. Have to move us now on to the section of our show called Big Click Energy, which is a quickfire roundup of some more click-worthy news this week. Just one story in the section this week that's taken from Finextra, and that is Spanish banks test out a digital euro which could pave the way for an EU rollout. Using existing payments infrastructure, Spanish banks have been trialling the use of a digital euro. So far, the tests have demonstrated a use case for the digital currency with the view to expanding across the Eurozone in future. The European Central Bank have been keen on an interconnected payment system, and these trials are a step closer to making it a reality. I am probably the absolute opposite of an expert in blockchain and Web3. So go check out our sister podcast, Blockchain Insider, if you want to kind of get that lens. But I think this genuinely is a really interesting proof of concept. Started, I think, in around November 2022 with around 30 banks, plus some other kind of key infrastructure partners kind of coming together to explore this with a specific focus on trying to explore, again, this idea of could you have a new currency being offered via existing rails? And these results do seem to suggest that you could leverage existing payment rails rather than having to kind of build net new, which I think is, again, for someone who's not immersed in this space day to day, I think that's kind of almost like the assumption that you might make is that, new currency means new rails, which means new services for customers to have to adopt and new things for people to have to explain. So this to me feels really exciting from a customer adoption potential that you potentially might be able to, within Spain or kind of elsewhere in the EU, to potentially have new currency options, but delivered via more familiar or already established kind of payment rails. So have to kind of wait and see what the European Central Bank decides to do as well. I think they've got some research they're expecting to launch in the next couple of months around the digital euro as well. But an exciting time for CBDCs generally. So again, check out our sister podcast if you'd like to find out more. Okay, now it's time for the and finally section of the show. I look at something normally a little bit more offbeat from the news this week. We've taken this story from the BBC. US prosecutors file 23 charges against politician George Santos, including wire fraud and identity theft. The Republican politician is being charged on multiple counts of defrauding his campaign donors by using their credit cards for personal transactions. He is also accused of falsely inflating his campaign receipts with non-existent loans. This follows 13 charges in May for laundering campaign funds. We've been chatting, I suppose, a fair bit on the rest of the show about payment fraud and on all the sorts of things like that. I've probably been living under a rock because I actually had not come across this character before. Stephany, is this my fault? Has this been a big story for ages, or is this just flared up?
Well, I don't know if it's a global story. I don't even know if it's a national story, but I live in New York, which is where he is districted, and it's definitely been a local story for quite some time. Well, I can't obviously comment on the state of American politics. It's been newsworthy, and I think one of the peculiarities of the situation is that despite these allegations and charges, which seem to have substantial heft behind them, he remains on essentially active duty, which is a bit of a question mark, right? I would presume that under those circumstances, perhaps a politician wouldn't remain in seat, but that is my presumption. I am not, sort of qualified to say. But it certainly has been a topic as of late, and particularly locally, as we've gone from, identifying problems to actually seeing charges formally filed.
Yeah, no, it just seems, I was reading about it before we started the show, it just seems absolutely mad. So apparently he's been accused of lying about his college degrees, his work experience. He apparently claimed to have worked for Goldman Sachs and Citigroup, which apparently is not true. I mean, I could stand corrected on all of these things, but this is just what I read. He apparently falsely claimed his grandparents had survived the Holocaust and had created a fake animal charity that he used to siphon away cash meant for a veteran's dying dog. It just sounds absolutely bonkers. I don't know if that's, I think I've only even scratched the surface of this. Mandy, is there somebody that Nationwide would be happy to bank?
Well, when you read anything like this, and like you, I'm not familiar with George. You do start to realise how kind of whether that be the organisational brand, your personal brand, really, really matters from a character perspective and trust. And ultimately, once you lose any of that aspect, it's really hard to regain. And when you read anything like this, I mean, like I say, I can't comment on this case, and nor do I know if it true, false, don't know. But like anything, I just know that working for a brand like Nationwide, it was kind of, I saw all of your kind of facial expressions, which I'm sorry that the other people can't. You almost, there's a different facial expression when you say a particular brand to another. And that actually is what's quite endearing, really, when you know there's a brand you trust. Yeah,
no, absolutely. Uneesa, do you have any observations on Mr. Santos's interesting behaviour?
I mean, I feel like it's quite the painting he's put together out here with the brushstrokes of and embellishments of all sorts. Look, what I can probably say is I just like Mandy and Stephany, I can't really speak to knowing an awful lot about this particular story. I have definitely sort of heard trickle downs in the news here and there, but I think what's more of a concern is and this comes back down to trust as well. As much as the idea of personal branding, it comes trust. So very much like, who you choose to bank with, there's an element of trust with that. There is an element of security that's, as an individual, as a customer, you go towards or you move towards a certain bank for whatever reason, and a large element of that being trust. In a similar case, when we look at politics, a large amount of politics is about trust and is about who you can believe and is about, is this individual, is this political party able to deliver on my sort of set beliefs or the things that I believe would be great for my particular country. I think what we're seeing right now is that trust is at an all-time low in politics, whether that be across the pond or whether that be in the UK or otherwise. And once that sort of starts to diminish or starts to be chipped away, you kind of have this idea of certain types of behavior becomes more normalized, and then people become slightly more apathetic. and therefore there becomes little resistance to it. But I think the fact that we're sitting here, we're talking about it, I think I feel like I'm okay to speak for the panel and say this is quite a story. I think it's certainly something, and the fact that, as a society, we feel that there needs to be more trust, and we need to be having sort of well-suited candidates put forward is something that we need to be pushing forward with and bringing these sorts of stories to light.
Yeah, absolutely. I will certainly not be lending him my credit card anytime soon on this basis. Okay, to round us off, the race to the White House, picking up speed. We've seen some independents go in or sort of starting to talk about going into the race. So if you ran for president to engender this trust that you've talked about, Uneesa, what's your campaign slogan going to be? What's going to rally the people to your cause?
Oh gosh, that's a great question. Maybe something along the lines of do right, act now.
I like it. Strong. Mandy, what about you? What's your platform going to be?
I think it'd have to be something about kind of, you can trust me, you can rely upon me, that kind of, something along those lines. A bit cheesy, I'm sorry.
No, all good.
But you get the point, is,
I get the point.
I'll do what I say. I'm going to, commit to, I suppose.
I thought I'd vote for you based. I'm getting a strong sense of reliability from this conversation. I'd vote for you. Stephany, what about you?
I think for me, it would tie back to the vision and mission that we have at Orum, which is to find the freedom to build to your potential. And I think for me, it's just something I think a lot about as a first-generation American, watching my dad come from another country and raise himself up here and find his footing. I think there's so much about our economic stability with each and every American wallet that could be a full focus of a campaign. Obviously, lots of other topics too, but that's where my heart is.
That's a far more genuine and compelling thing than what I would offer. I think mine would just be straight to the bribery. Vote for me, get pizza. That's something like that. Pizza is the way to the people's hearts. It's certainly the way to my heart. So that's what I'm going to plump for. Awesome. Well, that wraps up this week's FinTech Insider. Thank you so much to all of you for joining me. I've loved hearing all of your takes. Where can people find out a bit more about you and what you're working on, Stephany?
Learn more about us at Orum.io. Find me on LinkedIn or shoot us a note, hello@Orum.io.
Brilliant. Mandy?
Yeah, via nationwide.co.uk. Have a look at all we've got to offer, or come and see one of our people in the branches. We'd love to catch up.
Absolutely. And Uneesa, what about you?
You can find me at UneesaZaman.com, and my social handles are at UneesaFinance.
Brilliant. And as for me, you can find me on LinkedIn, Kate Moody on LinkedIn, or drop me an email, kate@aloneaffairs.com. Thank you so much for listening. You can join the conversation on social media or email podcasts at aloneaffairs.com. Thanks very much.